everybody, good afternoon. It's Sami here. I wanted to come on and talk about something that is not very frequently talked about in trading circles, and that is how to be successful at trading without being great at chart reading, without being a great chartist yourself. And there is a tip that I'm going to share with you, but first, let me actually share with you something a bit funny. And it's a saying that I came across one time, long time ago, about traders, about novice traders. And the saying goes something like this: most traders eat like birds and crap like elephants. Pardon my French. Eat like birds. When they make money, they make very small money. And then when they lose money, they crap like elephants. They lose big money. And that is exactly the opposite of the golden rule of trading. What's the golden rule of trading? It is to let your winners run and cut your losses short. That is the most important rule when it comes to trading. And so there it goes, or here it follows. You can be great, you can be successful at trading without actually being a great chart reader if you can let your winners run, if you can ride the winners, if you can let the winners run and cut the losses short. There are actually only four things, truly, only four things that affect the bottom line, that mean uh, that have all the impact on your trading, that make all the difference in your trading, whether you succeed or not. There are only four things. And I'm going to talk about those four things in another video. But there are only four things. One of those things is the Sharpe ratio. The Sharpe ratio is the average winner compared to the average loser. Okay? And it occurred to me that this is something that is really important to talk about because I recently got an email and I did a coaching session on it for the Black Room members about how it is possible that I end up with a P&L like this. This is not this is not something to brag about or anything like this. That's $3,700. It's nice. Most people out there don't make that kind of money, but it's not, I routinely have this kind of a P&L. But look at the size of the losers. 100 bucks. 106 was my largest loss today, right? 77, $5, 99. That's it. Now, do I have huge winners? No, but some of the winners are 10 times the size of the loser. APHA, which was called in the Black Room on the mic this morning and posted as an official play. OCUL was also on the mic in the morning. And there was one more, but I don't know which one, on the mic. And in the afternoon, the VNDA also called and played in the Black Room. And if I were to, let me see, if I were to look at my P&L for the last few days, um, I'm sure it probably follows the same thing. I have small losses routinely. So this is today's P&L. Today is what? Okay. So here's Fridays. Is that Fridays? So Fridays was the 30th. That's the 30th. Okay. I have the largest loss was 230 bucks. That's it. Um, I only had one nice large winner was the SFM 3900. But look, you don't need to even have large winners as long as you can keep your losses limited, as long as you can keep your losses small. What about the day before? Okay, I had a $500 loss, but that's actually my risk unit, my R. So that's okay. I risked an R and I lost an R. I risked one risk unit and I lost the whole thing. That's fine. But that's the biggest loss. The rest of them, and that was pretty much abnormally big compared to the other losses, right? The day before that, the 28th, the largest loss was 19 bucks, 20 bucks, right? And then the other ones were winners, and so on and so forth. The day before that, I guess this day I did have a couple of losses. I mean, more than $30, 600 bucks OMI. $300, $267. But again, they pale in comparison compared to the winners. Most of them are, I mean, I didn't have a lot, but 2,600, 300, 700 almost, 670, 360. So the point is, if you keep your losses small, right? And if you keep your losses small, you don't need to make a lot of money and to end up on the day. And just 400 at the end of the day, being up 400, if you can actually average 400 a day, then that's basically $100,000 at the end of the year. Okay, that's $100,000 at the end of the year. So keep those losses small, maximize the winners, and you almost don't need to worry about anything else. You don't need to become the greatest chart reader in the world. You don't need to win most of the time. I'm routinely wrong half the time. Like 50% of the time I'm wrong. Routinely wrong half the time. But as long as I keep my losses small when I'm wrong and my winners much larger than my losses, then who cares? Who cares? If you read Market Wizards, the original book, he had a follow-up book, the original book. He interviewed obviously the author set out to interview the world's best traders, thinking or hoping to actually, he was himself a trader, Jack Schwager. He wanted to see what they all did so he can do it too. He thought they all did the same thing that made them successful. And he found out, much to his surprise, that not two traders traded alike. Each trader traded differently. They had one thing in common, and that was that they all traded in a way that suited their own natural personality. So they traded in line with their own natural personality. They had that in common. But in one of the interviews, he said, I have a hedge fund, I have a whole company, and the trader with the highest batting average, meaning the trader that was correct the highest percentage, right, most of the time, only was successful 63% of the time. That was the highest that that hedge fund manager had. And yet he made millions upon millions, billions probably. And so how is that possible? You can be right only 63% of the time or 50% of the time and still end up with a really nice P&L at the end of the day. How is that possible? It's possible only if you follow the golden rule of trading, which is to let your winners run and cut your losses short. So this is just a quick lesson on the golden rule of trading, and I hope it inspires you to work harder on your management, and especially we can't always pick the winners, but the losers, we all, it's easy to pick the losers. So hopefully it inspires you to let them go quickly, right? To just get rid of them quickly and not to revenge trade, which is a huge problem for most people, especially when they're starting out, because they trade with emotions, with a lot of emotions, and so when they lose money on trade, they want to go back to the same trade and get even and get the money back. When I lose on a trade, I get it off my charts. I mean, I try. Not I don't always get it off my charts because I know sometimes it's still a good watch, but most of the time I don't want to even go back anywhere near it, because it showed you a loss, right? It told you I'm not bearish, don't stop shorting me, or I'm not bullish, stop buying me. Does that make sense? So, and that's why it is also said that the first loss is the best loss, because the first loss actually reveals gives you some information. It tells you whether you're right or wrong. And if you're wrong, just get out of it and go try something else. Don't keep going back to the same thing. Does that make sense? So it really boils down to the basics. As you can see, my friends, it boils down just to the basic stuff. You don't all need to be great at reading charts. It's helpful for sure, picking the right chart, the right trades. That's helpful. You want to stack the odds in your favor as much as possible, but that's not crucial. right? If you can follow the golden rule of trading. Now, of course, it's a whole lot easier said than done. I know that. I already know that. But a journey of 1,000 miles starts with the first step. So you have to take a step in the right direction, and then from there build on it, and then that's how you get consistency. I showed you I went 4 or 5 days back, right? The biggest loss I had was 500-600 bucks, whereas I've had $4,000 or $5,000 winners. And the last 4 or 5 days, I mean, nothing special necessarily. We're actually December is the slowest month of the year, but today is the first day of December. So it's a relatively quiet time in the market, and yet, or it's not a quiet time in the market, but on the gap front, I'm a gap trader. I focus on gaps and momentum. There's not a whole lot going on, and yet I can carve out a nice day almost every day by just making sure I follow that golden rule of trading, making sure I get out of the losers quickly, and I don't go back to the losers. I don't revenge trade, even though sometimes I'm dying to get back in that trade because for example, the VNDA today, I was pissed. I mean, pardon my French. I shorted it, right? I told you I shorted it at the top, and then I tried to get out at 32, and I got filled at 32.48. I tried to get out at 32.01. I don't know where that is. Um, and this is a 1 minute chart, and I got out, I got filled. Oh, here it is, right here. I tried to get out right here. I got filled at 32.48. Check out the bars high, 32.48. Can you believe it? I took 47 cents spread, basically, slippage. I got back in it, and that's how it made the money. But I got it here. I was supposed to get out here, not up here. So sometimes, you get. I mean, I feel like I want to go back and get my money back from that nasty stock that stole it away from me. But again, at the end of the day, I know what I'm supposed to do, right? And if you just develop the discipline to do it, to practice doing what you know is right, what you're supposed to do, which is not revenge trade, then it becomes easier over time. Then you can just kind of talk to yourself and say, I know you're upset. I know you're angry. I know you want to go back in that stock, but you shouldn't do that, and you just move on. And you kind of the same thing in life. You just sometimes you want to say something, but you learn to control yourself, and this way you become good at you don't take insults personally, right? You don't get too reactive easily. And the same in trading. All right, guys, I don't want to keep talking about the same thing here, but I hope you enjoyed today's lesson, and I will talk to you soon. Check out the Black Room if you're interested. Um, I dropped the link in the description if you want to check it out. I'll see you there, or I'll talk to you sometime soon. Take care, everybody. Good night.